day, grade 12 learners. Welcome to today's mathematical literacy lesson. My name is Methala Chia. This lesson is brought to you by Gauteng Department of Education in collaboration with Sabono Discovery Center. Welcome, grade 12s. This is your year. You have been waiting for. You have worked so hard to be in this class this year. So today our focus, grade 12, will be focusing on finance. And then with this finance, our subsection that we'll be focusing at, it will be financial documents. I know your teacher has already started with this topic in class, and then what you need to do, you just need to go through what your teacher did with you. Just a reminder, because you started with this topic in grade 10. Now, let's see what is our objective for today's lesson. By the end of this lesson, you should be able to read information from variety of documents such as till slips, account statements, household accounts or bills, invoices, pay slips, travel allowance, tax loans, and tax and loans documents. Boys and girls, remember again, we need to be able to develop an understanding of the difference between a VAT inclusive and VAT exclusive and a VAT value. But this part of VAT, we'll do it in detail later when we do taxation. It's just for you to know that what is in finance. Again, boys and girls, let's have a look at this one. How broad is this topic of finance? Remember, finance, it is a paper one topic. So in paper one, we are having finance, data handling, and also probability. But finance takes most of the percentage, and then data handling is only 35%, then probability will be 5%. Now, boys and girls, let's have a look. Finance, it's so broad. We have unit 1, we have unit 1, unit 2, unit 3, and unit 4. So under unit 1, I might call it a unit, but in your book, it should be what? A chapter. So now when we look at this unit 1, it says financial documents, VAT, and UIF. That's what we'll be focusing at. And then from there, we move now to what? To taxation. And as we'll be moving to taxation, we'll do it in the next session. From that taxation, we go straight to unit 3. And then in unit 3, we'll be focusing on income, expenditure, profit, loss, budgets, selling price, cost price, and break-even analysis. All these topics, then let's talk about the last unit being unit 4 for tariff. And that tariff will be focusing on the tariff systems, the interest, banking, loans, exchange rates, and inflation. So after we have completed all these units, we know that we have covered all the topics under finance. That is why I said finance is so broad. It's not only about financial documents, but financial documents, they form the basis of finance, because once you understand how to interpret those documents, and then it becomes easier to deal with all sorts of questions based on finance, because it's all about reading information, interpreting it, and then you get to answer the questions. Now, the glossary of terms, I think your teachers have already given you this glossary of terms. These are the terms that you need to be familiar with when you deal with finance. Number 1, we'll be focusing on the account. The ones that are in red, those are the ones that we'll be focusing on for today's lesson, which is financial documents. And then the rest, you'll do it. Remember, I gave you 4 units. So the rest, you'll come across them as we are doing the 4 units. So let's see, boys and girls. Now, under finance or financial documents, what are those terms that you need to be familiar with? And remember, with these terms, they are so examinable, because now the examiner will say, define this in the context given. So you look at the financial documents given, and then you define the term in terms of the context given. So, but now you need to know the basics first. Where do these words come from? What do they mean in simple terms? Now, let's have a look at till slip. We know till slip. We are so familiar with till slips. So a till slip is a receipt which serves as a proof of payment of goods purchased. Now, every time when you go to a store, let's take even ShopRite, Pick n Pay, any store, you go inside, you pick an item, then you go to the till point, you pay for that item, and then they will give you a receipt. Some other shops, they will require that receipt before you leave the door to say, let's see, what did you buy? So it's a proof of payment that you have purchased this item, you did not steal it. So why is it important that you get also a till slip? Should maybe when you get home you find that whatever that the item that you bought, it's not in good condition, you are able to take it back to the shop and say, I bought this yesterday and I find it that it has expired, or maybe it's broken, or it's not in a good condition, or the condition that I was expecting it to be. Then you are able to take it back, and then they'll say, where's the slip, where's the proof of payment that, or a proof of payment that you bought this item. Then you give them the till slip. And then number 2, we have a household account or bill. Now with this one, a household account, it's an account sent to a customer. So this one, it is sent to a customer for services used by their household, such as water, electricity, telephone and cell phone accounts. So we know that where we are living, we have to pay for the services. It's not everything that is free. So now you'll need to have an account statement sent to you to say, these are the units of water or of electricity that you have used, and then this is what they are charging per unit, and this is how much you are supposed to pay, including tax. If it is, yes, including tax, not if it is added, including tax, because remember now in South Africa, we are paying tax for everything. Now let's continue, boys and girls. Invoice. What is an invoice? You need to keep this at the back of your mind so that when we continue with the lesson now, you will see where are these words applicable. What do we refer to when we say this is an invoice, this is a household account bill, this is a till slip? I will show you the examples of such. Now, let's see. Invoice. An invoice is a list of goods or services rendered together with a statement of the amount due. So meaning, these people, say, suppose you hire people to come and do some work at your place, and then they will give you an invoice to say, madam, in your household, this is what we have done. We have painted the walls, and then this is what we are charging for painting the walls. And then we have bought a paint, how many liters, and how much did it cost us. So now they will give you that invoice showing everything that they have done together with the statement of the amount due, to say, now, since we have done this work for you, since we have performed these services for you, this is how much we are charging you. This is what you are supposed to pay. So it's an invoice that you are getting for the service rendered, or a list of goods together with a statement of the amount due. When we continue, boys and girls, you get that statement. But how are you going to know what is happening? Now you have to check. You have to be familiar with the term opening balance. What are we referring to with the opening balance? We say the opening balance, it is the amount of money in the account at the end beginning of the period. Sorry for this, it's a typo, it's error there. So it is the amount of money in the account at the beginning of the period. So now when we say it's an opening balance, so opening balance this month, maybe last month you paid your bill, and then you bought some goods, then at the beginning of the month, the new month now will be having the opening balance, which is the closing balance of the previous month, and then it becomes the opening balance of the current month. And then with the closing balance now, after, remember, it was opening balance, and then there were some transactions taking place. You were debiting, you were buying, you were paying, you were doing whatsoever in your account. And then at the end, we'll have what we call now the closing balance. Boys and girls, once you understand these terms, the opening and the closing, don't confuse the two, because the opening is not when you started to open the bank account. So say suppose you opened your bank account when you were in grade 7. Maybe they came to your school, or your parents opened an account for you at the bank. So they paid a deposit there. So that deposit will serve as an opening balance. And then they continue doing what? They continue depositing money for you in that account. So as they continue depositing money in your account, so they know that maybe they put away 50 rand every week. So they know by the end of the month, how many months are there in a week? 4 months. Then at the end of the week of the month, how much do you have now? You'll be having 200, because we said it is 50 rand per week. So by the end of the 4th month, you'll be having 200 rand, and then that will be your closing balance. Then the opening balance for the 2nd month. Now say suppose it was in January, now in February, the opening balance in your bank account, it will be what? The 200 that we closed with at the previous month. It will serve as an opening balance. Then they continue again with the transactions of depositing the money every week, and then by the end of February, then we'll be having another amount, which is now what? The closing amount, or the closing balance. You just need to remember that. So now, boys and girls, let's continue. Amount due. When you get your statement, you need to know what is the amount due. Amount due is the money that needs to be paid. So it means when they have rendered the service, they will show you that at the end here, this is the amount due. This is what you are supposed to pay. Even in your clothing account. Remember now, we have those clothing accounts. And then you look at it and say, okay, at the beginning, maybe they gave mommy a credit of 1,000 rand. And then she bought me, what, a pair of shoes to the value of 300 rand. And then she also bought me some socks to the value of 100 rand. So remember the opening credit now. It was what? It was 1,000 rand. The money that they gave your mother to buy with, it was 1,000 rand. And then she made some purchases, and then she paid again, maybe in between. And then now the closing balance, they will say this is what is left. And then now on a monthly basis, how much, or when you make your payment, how much are you supposed to pay? That will serve as the amount due. So for you to know, they need to indicate that out of the money that you have used, then this is what the minimum that you are supposed to pay. That will be the amount due. Let's continue, boys and girls, with the debit now. The debit is the amount of money that is owed by the client due to the money being taken out of the account, and it is indicated by the abbreviation DR. So it means the money, it has been removed out of your account. So that money, as it is being taken out of the account, and then it is indicated by the abbreviation DR, we say it is a debit. So if you say, please take this amount of money out of my account and pay it somewhere, then that amount, we call it a debit. And then a debit balance. What is a debit balance? With a debit balance, boys and girls, the amount paid on previous account was less than the amount owed. Therefore, the money that is still owed on the account. So it means, boys and girls, in simple terms, you are supposed to pay 500 rand on your account. Then you say, no, I don't have money. I'm not going to pay them 500 rand. Then I'm just going to pay them 300 rand. How much is remaining now? It is 200 rand. So it means 200 less of what you are supposed to pay. So the debit balance, it is less the amount of money that you're supposed to pay the previous account. I hope you understood that. It says the amount, debit balance, it is the amount paid on the previous account was less than the amount owed. Therefore, the money that is still owed on the account. We call it a debit balance. I hope now it's clear. Remember I said you're supposed to pay 500 and then you did not pay 500. You only paid them what? 300 rand. So it is 200 rand less. That 200 rand less is what we call the debit balance. And then we have the credit. When we come to the credit, we are not referring to the credit account or credit card, but we are referring to the credit on the statement. What is the credit? Credit is the money coming into a client's account due to money being paid into the account and indicated by abbreviation CR. Say suppose I call you, friend, do you still remember that you owe me 1,000 rand? And then a friend says, okay, my friend, no problem. I'll pay you at the end of the month. So when my friend deposits that money into my account, it becomes a what? A credit, because now it is the money coming into my account. But again, boys and girls, these terms, we only use them on our financial documents and based on the context. You answer based on the context when you are to answer this terminology, because you look at the context and then you'll be able to tell, oh, this credit, when you look at the financial statement given to you, is it the money coming in or what? Then if you see that it's the money coming in, then you know it is the credit. And then the credit balance is the amount paid on the previous account was more than money owed. So now if I owe a credit card, or let me say, if I owe my bank money, I have used more than what I am supposed to use, or I have used more than what I am having, that balance, it becomes a debit balance, because now I have used more than what I had. And then the credit balance, maybe I have used the money, or maybe I have paid. And then since I have paid, now listen to this one. I'm talking about the bank now. So I have paid more. So if I have paid more in my account, then my account is now on the positive. I don't owe the bank anything. Then I have more money left on my side. Then that amount, it is the credit balance. It is the amount paid on the previous account was more than money owed. So if I owed them 300 and then I pay 500, so I've got a credit balance of 200 because I've paid them more with 200 rands. I hope we are together, boys and girls. Just understand these abbreviations, know when to use it, and then you'll be able to define it based on the context. Let's continue, boys and girls. We also have the term installment. What are we referring to when you talk about installment? Installment, one of the several payments that you make over a period of time to pay something that you can use while paying for it. So, for example, a clothing account, we pay a monthly installment. So it means we took the goods from the store. We went to Edgar's, we bought some items, we took the goods on our account, and then we have to pay back this money based on the amount due. So the store will charge us the minimum payment. They will tell us this is the minimum payment that you must pay. And then now when you look at that minimum payment, you say, oh, okay, we took these goods, we have them at home, we are wearing them, and then we pay on a monthly installment. What are we paying? We are paying that minimum amount, or whatever amount that is being indicated on the statement. Remember what I said about the amount due. The amount due is the amount that you are supposed to pay. Then it comes way into installment. So now the amount due, say the amount due for this month, it is 300 rand, and then, or maybe on a monthly basis I am paying 300 rand, and then it happened that I have extra money, I am not going to pay 300 rand, and then they will show that, okay, fine, this is your amount due, and then I decide to pay whatever amount that I have. Or maybe I was supposed to pay 300 rand, and then I did not pay the 300 because my monthly installment, remember we agreed that, okay, fine guys, this is what I have used, and then you're saying this is my minimum installment, and then I don't have money for this month. Instead of me paying you 300 rand, I will only pay you what? 150. So how much am I falling behind with? I am falling behind with 150 because it was supposed to be 300. I only paid 150, so I'm falling behind with what? With 150. Now the following month, remember my installment is what? It's 300 rand, and then plus the debit balance. Now what I owe them, it will be the 300 plus the 150 that I fell behind with, which will be now what? 450. So now they will indicate that the amount due now is what? It's 450, no longer 300. So my installment is 300 plus the amount that I was falling behind with, and then it's 150. Then I add the amounts together. Now the amount due, it will be 450. Now I hope you understand how do we use these terms. Then due date. What are we referring to when we come to due date? When am I supposed to pay the account? If my account is supposed to be paid on the 20th of every month, that is the due date for my account, on the 20th of the month, or maybe on the second day of the month, on the second day of every month. This is the minimum amount that I'm supposed to pay my installment. Then it will indicate the due date is on the 2nd of the month, of the new month. So if it's 2nd of February, so I know my due date will be on the 2nd of February. I hope you understood. So we say the due date, it is the date by which an account must be paid. Now, boys and girls, remember we said finance is broad. And then we spoke about the utility bills, we spoke about the till slip, and then now we also have the pay slip. It's part of the financial document. We need to understand what is happening in our lives. Remember, we are not going to get paid with an envelope. That is gone. Now we are getting paid via what now? Via an account. And then as they're paying us, we need to get a proof of this is how much they are paying me. I need to have a proof. The pay slip, it serves as a proof. Now you say a pay slip is a record of information. A pay slip is a record of information about remuneration. So remember I said I need to know how much are they paying me every month, and then what deductions are taking place in my account or in my salary. So if I'm paying for the UIF, I need to know how much are they deducting. If I'm paying for a union, how much is the union taking? If I'm paying for the medical aid, how much is the medical aid taking? So now we get that pay slip. So that pay slip is a record of information about remuneration. And now there are different types. We don't have only what you call a pay slip. Usually we say it's a salary slip, but there are different types. Now let's start with this one, a wage. When you talk about a wage is a payment made for work based on hourly or daily, weekly, or a piece of work rate, and also includes overtime work based on an hourly rate. So it means if I call you to come and do some work at my house, then I'll know, okay, fine, this person, I am going to pay them on an hourly rate. So if they have worked for 4 hours and I am paying them 20 rand per hour, so for 4 hours it will be 20, 40, 60, 80 rands. So they will get how much? 80 rands, because it is a wage. So it is based on the hourly or daily. Maybe daily, I say to them, okay, when you come daily, you get 150. So if they work for how many days? Say for 5 days. So it will be 150 times 5. That is their weekly now, because we said we are paying them on a hourly rate or on a daily basis or on a weekly basis, or a piece of work that they have performed. We call that the amount that you are getting paid at that time. It's what we call the wage. And then when you go into a salary now, you must see the difference. A wage, we said, it's done on an hourly basis or on a weekly basis or on a daily basis or for overtime. And then a salary now. A salary is a fixed payment for work in a pay period. So with a salary, you don't get paid after you have done some work at your place or wherever you are working. Say suppose you work now at ShopRite or wherever, and then they won't pay you. Like, let's take teachers. Teachers, they don't get paid on a daily basis, but they get a salary. So meaning they're paid on a monthly basis, a fixed payment for a work in a period of time. So they don't get paid every day, but they get paid at the end of the month. So it is based on an annual total. So meaning when we get hired, we are told that, okay, in your package, we'll give you 245,000 per annum, and then you go back at home and say, oh, okay, these people, they said they will give me 245,000 per annum. How much am I going to get on a monthly basis, a fixed monthly now? Then you go to your calculator and say, okay, 245,000, and then I divide it by 12. So meaning on a monthly basis, I can expect 20,416 rand 67 cents, because now that amount, they said it's based on an annual basis, an annual salary, and then they give it to me on a monthly basis. So they promised me to pay 245,000 per year, and then now they're giving that amount to me on a fixed rate. So meaning on a fixed month, every month I know I'm going to get 20,416 rand 67 cents, and it does not depend on the hours worked for. When we close, we still get paid. When we reopen, whether we are reopening on the 15th of the month and then we work up until the end of the month, for us, we'll get what they promised us, which is a salary, a fixed payment. It doesn't matter whether I've worked for 5 days for that particular month or I have worked for a full 30 days. But because they said it is a fixed amount that I will get on a monthly basis, then I must get my full 20,000. It does not say because you have worked only for 3 days, then you'll get money for 3 days. Now let's continue, boys and girls. We have the next term, which is a cross income or payment. We call it a cross income or cross payment. Others, you'll see at some other documents, they call it a cross income. Other documents, they call it a cross payment. What are we referring to when we talk about the cross income? A cross income, it is the income received before any deductions have been subtracted. For you to receive that income, oh, okay, they said they're going to give me 245,000 per annum, and then on a monthly basis, I am expecting to get how much? 20,416 rand 67. That amount, it is what my gross income, because there are no any deductions took place in that one. So it is the amount of money that I will receive before any deductions. And where do I receive that money? On my salary slip. So it is money on paper. So the employer will say, okay, remember I said you're going to get 20,416. This is what we are giving you. Now let's go into the deductions. What are we deducting now? The deductions are expenses that are subtracted from their gross income. Remember what I said to you? 20,416. Then I must pay for tax. I must pay tax. Pay as you earn. They deduct. And then I'm having a medical aid. I'm paying a certain amount on my medical aid. They deduct. And then I'm also a union member. Union will also get paid. Remember, for you to become a part of union, you must pay, you must affiliate. So now they will also deduct. And then I also took a loan when I bought my house. So it must be paid, that loan. From where? From my salary. So these amounts are taking the deductions. They're taking place on my salary before I can get paid. So from that 20,516, they'll be deducting this the insurance, they'll be deducting the pay as you earn, the tax, the medical aid, the union fees, the UIF, everything. It will be deducted there. And then after deductions now have been concluded, they add the deductions and they say, okay, fine, 20,416, and then your deductions are to the amount of 10,000. So what will be my take home now, which is the net income? Net income, it is what is left after the deductions have been subtracted. So the net income is the income received after deductions. So the net is equals to the gross income minus deductions. So now the money that there will be, that the money that will be deposited in my account now, we call it a what? A net salary, which is a take-home salary now, because that is what is coming to me. Remember, a gross, it is the amount of money or the salary that the employer has promised me, the 20,416, and then I've got all these deductions that are taking place in my salary. Then they will deduct all those monies, and then whatever that is remaining, that is the net income now. That is what will be deposited in my bank account. Now, boys and girls, remember what I said to you. We'll also be looking at VAT, but VAT will look into it in detail when we do taxation. But it also forms part of what? Of financial documents, because in our documents, VAT is charged for whatever item that you are buying. We know in South Africa, we are paying what? VAT, tax for the goods and services that are being rendered to us. So value added tax, VAT, the acronym VAT stands for what? For value added tax. The acronym VAT stands for value added tax. Don't forget that, because it is examinable. They do ask you, what does the acronym or the abbreviation VAT stands for? You need to be able to write value added tax, and is charged. A value added tax is a charge added to the purchase. It is added to the purchase of certain goods and services. So goods and services that we are taking or that are being rendered to us, VAT is charged. So a VAT or VAT is currently charged at 15%, at the rate of 15%. Our VAT is not less than 15%. It is 15%. That is what is charged. And then we have another terminology here that you'll come across when we do taxation, which forms a part of what? Of the salary slip, the pay slip, the UIF. The UIF, what does the term or the acronym or the abbreviation UIF stands for? So UIF stands for Unemployment Insurance Fund. How do you know? It says unemployment, I is for insurance, and then F is for fund. So this fund is set up by government, which gives a short-term relief. A UIF, it's set up by government to give a short-term relief to employees when they become unemployed. If you are not working and then you have been contributing towards the unemployment insurance fund, you are able to go and claim the money that you have contributed. It will assist you while you are still looking for another work, while you are unemployed, or maybe you are unable to work due to what? Due to illness, or maybe you are on a maternity leave, and then or paternity leave, also for adoption leave. So when you are unable to work, then you are able to claim for what? For the UIF, because it's a temporary relief to say, even if you are not working, you've been putting money away, which is 1%. And an employer will deduct only what? 1% of your basic salary, and then the employer will also contribute 1%. So for UIF, it will be the 1% from the employer, 1% from the employer, and then also 1% from me. It will be deducted from the employee. So all in all, when the money is taken to the scheme, to the insurance fund now, 2% will be taken to the insurance fund. They won't only take 1%. It means the employer meets the employee halfway. Say, give me 1%, I'll also give you 1%, and then we put it together, we take it towards the unemployment insurance fund. So should you become unemployed, or should you be unable to go to work, and then you're able to go and claim, and then as you claim, they'll be giving you a portion that you have contributed. But we'll do that in detail when we do taxation. We also have a financial document based on allowances. When you conclude, you have concluded your grade 12 and at the end of 2024, now you apply for a bursary, NSFAS. Then they will be giving you the allowances now. The allowance is the money that you'll be getting for a certain activities. For example, those who are at university, it's for food, also for accommodation. That is the allowance that they're getting, because remember, it is a bursary, so they give them the allowances. And then at the workplace, an allowance is the amount of money allowed for certain activities. For example, a car allowance is the amount of money provided by the employer that is dedicated to petrol, wear and tear of the vehicle. So remember, the car doesn't only use petrol, but you must also maintain it. You must buy the tires, you must service it. So that allowance money, it is the money meant for the servicing of the car, and also for the petrol and buying of the tires. Maybe you again, as a grade 12, you are so fortunate, you have a scholarship. You go and live somewhere in another province, and then you go and attend there, or maybe you go overseas or wherever. Then your parents are giving you an allowance. They'll be sending you money on a monthly basis to say, our child, because you are not at home, you are unable to share the food that we are eating here at home with us, then we are giving you this allowance. This is your money for what? For transport, for you to be able to go to school. Here's the money. And then for you to be able to buy yourself some toiletries, here's the money. For you to be able to buy yourself maybe textbooks or whatever that you want to buy for yourself, here's the money. That is the allowance that your parents are giving you. Even right now, even while you're still living with them, they still give you an allowance. They say, this is your lunch money. They'll give you a certain amount. They say, go, here's your 500 rand for a month. How you use it, it's up to you. It's an allowance. Should you finish it early, then don't come back to us and say, I don't have money for lunch. They gave you your allowance, 500 rand. So you need to take care of it. So that is the allowance money. It's not only based on the work. So that is why we say an allowance, it is money allowed for certain activities. Then the other one, and the other part of financial documents, we have what you call the loan agreement. A loan agreement, we will also do the loans in details at a later stage. As you have seen under Unit 4, the loans are there as well. So what is a loan agreement? A loan agreement is a contract between two parties whereby the lender gives money to the borrower. Who is the lender? Bank is the lender. It gives the money to who? To the borrower. Who is the borrower? I'm the client. I'm borrowing money from where? From the bank. To do what? With the okay, fine. The bank is the lender borrowing me the money with the expectation that the money will be repaid together with interest by means of monthly installment within a fixed period of time. So you do that. They give you money and say, okay, fine, here's the 100,000. We are borrowing it to you to buy whatever that you want to buy. Or maybe you don't have money to buy a car and you saw a nice car. And then you say, oh, okay, this car is so beautiful and I'm working, but I can't afford to buy it cash. Then you go to the bank and negotiate and say, I saw a nice car that I want to buy, a BMW X5. And then the repayment for BMW X5 is 10,500. And I don't have that money. So now what the bank does, it will borrow you the money. It will pay BMW, and then BMW will release the car to you. And then you have to pay that car back to the money. You have to pay the money that the bank has borrowed you back to the bank. And then how are you going to pay them? On a monthly basis, monthly installments. And then that money also, they have added the interest to say, because now you'll be using our money. We gave you the money to buy, and then you're driving the nice car. So we are charging you interest because you did not have money. Like Abomashonisa, they will also charge you an interest. They will say, oh, I'm giving you money. When it comes back, it must be having 25 rand on top. So we know that is the interest. So now, but when it comes to a loan agreement, you sit down, you agree and say, okay, fine, you are borrowing me, you are the lender, which is the bank. And then they are saying, okay, we're giving you this amount of money, and then we expect you to pay it on a monthly basis together with an interest. You'll see when we do the example. And then the loan term, for how long are you going to pay them? Are you going to pay them for 2 months? Are you going to pay them for over a period of 5 years? Or are you going to pay them over a period of what? 48 months. Remember, 5 years is 60 months. And remember, they said loan agreement will be paid over a period of time on a monthly installment. So they can't say for 5 years, they'll say for over a period of 60 months because you're paying them on a monthly basis. But they take that amount and then plus the interest that they are charging you, they combine the two amounts and say, this is what we are expecting from you. This is the minimum installment that you'll pay up until the end of the term, up until the end of 60 months. Then you'll have paid them the money that they have borrowed you plus the interest. So now remember, we said the term loan. The term loan is a fixed time period in which loan needs to be repaid and usually stated in months. I've already explained that. I don't need to go back to explain it again, but you'll see when we do the loans, then where it comes in, you'll understand it better there. Now, boys and girls, we are done with the terminology on financial documents. Now let's see, financial documents, it's not only limited to what I stated on top. When you talk about the financial documents, the examples for financial documents, it's account or bank or credit card statement, budgets or income or expenditure, budgets or income or expenditure statements, cash slips or receipts, salary advices, or we call them the pay slips, the quotations or invoices, traveling allowance claim forms, the utility bills, income tax documents, etc. Boys and girls, I have already spoken to this. When I was doing those terminologies, we spoke about the account, we spoke about the credit. Here, these are the documents. That terminology that I was discussing on top, you'll see it on these documents: the account statement, the budgets, income and expenditure statements, the cash slips, the salary advice, the quotations or invoices, traveling allowances, claim forms, utility bills, income tax. Remember the traveling allowance, I spoke about it to say because now you are using your car, you need to take care of it. Now, this slide. In this slide, it is an example of a till slip. On a till slip, what can you expect to find? The name of the store, and then their telephone number, their contact details, the address of the store, the goods that you have purchased, and then the total of the goods. How much did they cost you? So here it is the goods that you have purchased, and then how much is each item that you have purchased, and then the method of payment. This person paid using electronic payment, meaning they paid using a card, and then how much did they pay, and then now the total. Okay, fine. The rate, remember what I said about VAT, the tax here it is, which is 15%, and then how much is that VAT in rands? It was 40 rands and 58 cents, and then the total amount there is what? It is 387 rand 89 cent, and this amount, it is VAT inclusive. And then they say, because now you are a member of Extra Savings, they say thank you for swiping, and then at what time did you purchase, and then the date that you purchase the items, and then it says please keep your till slip as a proof of purchase. Remember what I said? A till slip, it's a proof of purchase, proof of payment or purchase that you have made. And then if one of the items listed here, it's not in good condition, or it's not what you wanted, you are able to take it back and say, I bought this item on this particular day, here's the slip, and then look at what it is, or how it looks like. I'm not happy with it, so please take it back. And then they're able to say, oh, okay, true, they bought this on this particular day, and then they're able to take it back. And then they say, if you need more information, this is the information that you'll get on your till slip, who was your cashier for the day. And then on this one, it's a municipal account. On the municipal account, it shows the details now, the details of the account holder, and then the details of the municipality. As you can see, here's the municipality, the details of the municipality there, their address, their VAT registration, if they are registered with SARS, if they're paying VAT, and then the contact details of the municipality, and then now the account number of the account holder, and then the invoice number. Is this person an indigent or what? Are they allowed, do they qualify to pay for the services or not? So if it says 0, it means they don't qualify. And then notified demand, there's the number, and then the address is for which property, there's the address of the property, and then tax invoice statement, it shows, it says the VAT reference is 0 there, and then the meter reading, it shows us how many units did you use on your meter reading. So all the information is being displayed where on your municipal account. There you go, you have this date. On the 22nd of April 2019, what was the opening balance? This is, remember, it says it's a business account now. This one, their opening balance is there, it's stated, and then these are the units that they have used, the items. This side, it shows the description for these amounts charged here. So that means your utility bill, it will show the description of what they have charged you for, and then how much did they charge you, and then including VAT, it's how much. And then now they show you to say you can pay this amount over a period of 120 days, 90 days, 60 days, up until the monthly period. Now here that information is being indicated here, everything. And then they even tell you that the tariffs have gone up, or the tariffs that you see here, the new tariffs, when will they be implemented? They say it will be effective on the 1st of July 2017. So anything that happens in your account, they show you exactly in detail to say, now you qualify for this, or this is how much you have used, this is what you're supposed to pay us, and now because of the increment in terms of the tariffs, then that means you are going to pay a certain amount for the electricity or water that you have used. And then now remember what I said about the due date. When are you supposed to pay the money? Then there's the due date. It is reflected, the due date. Also, the receipt is up to which date? So meaning this account is for up to when. And then the banking details of the municipality, they're indicated there. So they even give you the notes on that statement to say account unpaid on the date payable are subjected to interest charged at the standard rate of 10% per annum compounded on a monthly services will be suspended. Please notify the municipality in writing of the termination of any services in order to avoid being held responsible for any cost. They even show you the kilowatt hour. What does the kWh stands for? It's a kilowatt hour, which is the unit of three-phase electricity, and then the kVA, kilovolt amp, is the unit for transformer electricity. So boys and girls, remember what I said to you. The financial document, it explains all the details of what is taking place in your account. We also have an invoice. We spoke about the invoice. This is an example of an invoice. Now here on this invoice, it says Mbombela High School is having their annual prize giving function. Fine. Mrs. Reynolds bought trophies for the function and received the following invoice. Now she bought the trophies. They're giving her the invoice. That shows what she bought, the items that she bought. It's a tax invoice so that she can take it back to the school, and then when they do the reconciliation, did this person pay for these trophies or did they steal them? And then the invoice is there. And then it shows the box number, the Mbombela High School, the address, the date at which the invoice was generated, and then the quantity of items that she bought, and then the description of the items, a wooden trophies with 2 branding, and then the unit price of that wooden trophy, and then how many units did she buy, the amount that she paid for that. And then the other one, it's an engraving, to have the name there written on the trophy. Also, she bought one, and then the unit price is 65 rand. She'll pay how much? 65 rand. So all that information is contained where? On an invoice. And then it even indicates again, boys and girls, the subtotal. So meaning the amount before VAT. And then remember we said the VAT is 15%. There's the 15% amount that they have charged, and then the total that she is supposed to pay, it is also indicated. So it means when she does her budgeting, or when the school does the budgeting, they know that they have used this amount towards this, and then the items appear on the invoice. Remember I said it is for the services rendered. And then we also have the bank statement. Here is just an example of check account statement. It shows the period. It is from when? From the 1st of February 2013 to 28th February 2013. And then it says the account type, it's a business, and the statement number, and then the date that the statement was issued. All this information here, it says issued on 28 February, it means the date that the statement was issued, the account type, date indicated, and then the statement number, that is the statement 206. Then account summary, how did you spend? Now they say balance brought forward. Remember what I said about the balance brought forward? There it appears, the balance brought forward. It's a check account statement. As you can see, the balance brought forward is positive. And then the sundries credits, meaning the money, the credits, money that came into, or the money that was deposited into the account, it is to this value that is appearing there, 28,164. And then cash, checks, and ATM withdrawals. Now, what took place in that account? Transactions that took place. So you have withdrawn some cash. You did the ATM withdrawals. You paid with the card to buy some goods there, and then everything that you have done there, it amounted to 3,941. And then the debits, the sundries debits, meaning the money that is taken out of the account, It is to the value of 12,000. And how do you see that this money has been taken out of the account? You'll see it with the negative. If we can look here, it shows some negatives. So those negatives, it says the money that has been taken out, withdrawal. If you withdraw, it means you're taking money out of the account. And then the debits, money is paid into another account. You are giving a third party money to say, oh, bank, please pay this third party on this particular day. It is the debit. And then the charges, the bank charges as well. Remember, the bank charges us for the services that they are rendering to us. So the charges are there. Now we have the balance, which is the closing balance. Now how much is left in the account, which is the closing balance? Does this person have an overdraft limit? No, it's 0. And then when you go down now with your transaction here, on your transaction, this one, it has the date when the transaction took place, and then the description, what type of transaction took place, and then the charges. So it is the transaction description. It describes what you did. Did you withdraw? Did you purchase? Did you settle? Did you pay, or what? It is indicated under transaction description. And then the charges, how much did they charge you for those transactions? The debit amount, how much has been taken out of your account. And how do you notice that it is a debit amount? Your balance will go down as they debit, as they take money away, the balance will go down. And then once you have the credit, as we can see, the credit amount, the balance goes up. Now quickly, I'm not going to do the calculations here, but I'm just going to show you. If you have a look here, from the 1st of February 2013, the opening balance, the balance brought forward, and then on the 1st of February, the transactions that took place here, it is the 1st of Feb. Now the transactions that took place here, they took place up until there. These are what are the transactions, the debits amount. So that means these amounts from here, they were debited. These ones from your account. Now the credit, if you have a look on this last one, let's just do this. On this last one, the balance, the closing balance was 10,749 rand 83 cents. This amount, it was 10,749 rand 83 cents. Now we have the credit. How do you know? It says ACB credit settlement. And then the money is coming into the account. Now, as the money is coming into the account, now the balance goes up. And then now the balance is now what? How much has been deposited into the account? 13,326. Now your balance is what? Is at 24,075 rand 97 cents. So remember, I said the credit is money that is coming into your account, and then the debit is money that is going out of your account. Then the salary slip. This is just an example of a salary slip. How does the salary slip looks like? This one is from University of Cape Town. It's just a sample. And then there it shows the name of the employee, and then who's the employer, and then the department that they're working at. The department is indicated there. Their ID number is also indicated. Their personal number, it's indicated there. And then the date of payment, when the salary will be paid and into the account. And then this person is a medical aid member. She has, or he has, a medical aid. And then how many dependents are there in the medical aid. That information is contained where? In the salary slip. And then also in the salary slip, we have the cash salary. As you can see here, it says cash salary. And cash salary is similarly to what? Cash salary is similarly to the gross income, because this is the amount before deductions. Now, when you look at this side, so this one, it is earnings here. How do you know that it is the money that is paid to this employer? To this employee, it is earnings. It appears as earnings. And then this is the amount that has been paid, 41,000 41,435 rand 90 cent. That is the the gross salary or gross payment. And then now comes to deductions. These are the deductions taking place in her account or in his account. They're paying tax, UIF, MA, Discovery Medical, and then for the parking, and then also for the parking at the UCT Vitality. So those are the deductions, the money taken out of the salary before they can deposit the balance, which is the net pay. And then how much is remaining? This person will remain with what? With 17,923 rand 65. So boys and girls, also here at the bottom, it's part forward for SARS now for the IRP5 information. You will see when we do the IRP5 information. So this one already is indicated at the bottom. So it means salary slip. It contains the information about your remuneration. How much is being paid, how much is being deducted, and then how much is left, which is the what? The net pay. It will even say it here. It is a net pay. These are the deductions. And then the net pay. So these are the deductions here, the 11,000. Now the net pay. Here it's indicated the net pay. This is what will be deposited in their bank account now. Because deductions were 11,000, now the net pay, the take-home amount, that will be 29,612 rand 45 cents. I hope it is clear, boys and girls. Remember what I said about the salary? It is a document that shows the remunerations that are taking place in your account. Here's another example of a salary slip. Your teacher will give you this presentation or the PowerPoint presentation, the slides, and then you'll be able to go through to this salary slip again. I've just given you two types of salary slips so that you can see. This one, it's the Lemvika Computer Solutions, the name, their address, where this person works, and then it's a pay slip for a period of January of 2009, and then it's employee ID, it's 2, the department is IT, and then date that they started working for the company is 2005, and then the name is Buju George, and then their designation, what is their position in the company, they're the director, and then what is their account number, then the PF account number, the ESI account, and then father's husband's name. All the information is contained. Whatever that the company needs from the employee, it will be indicated where? It will be indicated on the salary slip. And then here's the basic earnings. As you can see, this person gets the basic payment of 15,000, and then they have dreadness allowances. Remember the type of allowances? Now here it shows the allowances in categories that they get. The one for the dreadness allowances, medical allowance, overtime allowance, house rent allowance, and then also the conveyancer allowance. So it means this person, they work under IT, and then the deductions taking place. Do they pay state insurance? No, it's 0. And then for the provident fund, then they're paying this amount 708. For the professional tax, they're paying 200. It means their total amount of deductions will be what? 980. And then from this 980, they are taking it out of what? Out of the total earnings. And then the total earnings, meaning their earnings, the gross income. Now they'll be subtracting the what? From the gross income, they'll be subtracting the deductions, and then now the net pay, which is the net income, take home money, that will be 35,430. Now, boys and girls, I hope you understood all the documents. Now, let's go into real work now. But before we can go into real work, before we can start with these questions, let's go and drink water for a minute, and then we come back. We continue now with the examinable questions and see how the examiner asks these questions in the exam. Let's just get a break. Welcome back, boys and girls. I hope we are still enjoying the lesson as I'm enjoying myself. And I hope you understood all this context that we have done, the financial documents, the way I have explained them. I now hope you have a clear picture because your teacher's already done it in class. I was just doing the revision with you. Now let's do the questions. Let's see how the examiner questions in the exam. Now here, question 1, it says use the table. Now remember I said it's a financial document. As you can see, I said utility bill. Now it says use the table or table 1 and the information alongside to answer the questions that follow. But before you can attempt answering the question, go through the statement first. Make yourself familiar with the statement and see, oh, okay, what is information given here, what type of statement is it. This one, it says it's table 1 below is an extract from Tshepiso's cell phone contract bill. And then now the device, they bought it's a contract. And then what are they charging for? The description there, it's a device fee. And then when did they start? The contract started on the 1st of February 2019, and then the total cost of the contract is 6,399, and then the monthly payment, it is 266 rand 62 cent, and then the outstanding commitment value is 799 rand 98. Remember, we set a contract. You enter into a contract with a company or a service provider and say, I'll pay you over a period of time. And then that period of time, because it's a cell phone contract, they took it over a period of what? 24 months. Now, with this statement, it says 21 of 24. It means it's statement number 21 or a month 21 out of what? 24 months. Now, coming to the summary of usage, how did they use their account? Now, how did Tshepiso use his or her account? Now, it shows here that she made calls or he made calls to the national fixed lines, and then amount used is 12 minutes, and then Cell C calls 231 minutes, other mobile network calls 127, and then the SMSs and the MMS charges, she made 6, and then now the recharge amount is 400 rand. Now, for the national fixed lines, how much did they charge? 11 rand 5 cent, and then now we don't know what is the value of A. And then other mobiles used 112 rand 25 cents, and then for the SMSs and MMSs, nothing has been paid or charged. And then she used she recharged with how much? With 400, meaning she paid 400 rand for the recharge. Now let's have a look at the question. It says explain the meaning of the term cost in this context, because it is a utility bill. And this utility bill, how do you get an idea of what it is? It says it's a cost of the device and usage. Now they say explain the cost. We say now here the cost is amount charged. Amount charged for the device. Now the amount charged for the device, as you can see, it says cost of the device. So now they say explain the cost. The cost, it is the amount charged for the device, and they break it down into smaller pieces. Now let's go to question 1.2. Identify the total cost of the device. Now, what is the total cost of the device? Here, what I like about financial documents, the answers are there. You don't need to scratch your head. The answers are right there in the document. Here it says identify the total cost of the device. And when you go back to the table that is given, it says the total cost. And how much is that total cost? It is 6,399 rand. That is the total cost of the device. So can you see, boys and girls, it's so easy because now the information is there. You just identify the total cost of the device is 6,399. Let's go to the next one. It says write down the number of outstanding months for this contract. Remember what I said about the outstanding months. Now this contract, current month, as you can see, information is there. They said it is 21 of 24. It means the contract was for 24 months. Now they are on the statement or on the month 21. How many months now, outstanding months, how many months are remaining? So from the 24, you subtract 21, only 3 months remaining, because they told us it is 21 of 24, so meaning only 3 months is remaining. Now the next question, 1.4. Boys and girls, can you see now how fast it is to work with these financial documents? Because we have done it in detail. Now we are just answering the questions. We are interpreting what is in front of us. And then now 1.4, it says calculate A, the amount charged for cell C calls. Now, how do we calculate the amount charged for cell C calls? This one, we want the value of A. And then how are we going to get the value of A? Remember, here we have the recharge amount. How much was our recharge amount? 400 rand. It's given here. The recharge amount is 400 rand, and then we are to subtract what now? The first one, the national fixed lines, because they have used that one. It's 11 rand 5 cents. And then we also subtract what? Other mobile networks, which is 112.25. And then let's see now what will be the value of A, because for the SMSs and MMSs it's 0. Now we go to our calculator. Now as we go to our calculator, don't forget, this is very important. Now let's punch. We say 400 rand. We say 400 rand. We subtract the 11 rand 5 cents, and then we also subtract the 112 rand 25. How much are we left with? It means the value of A for the cell C, it will be 276 rand 70. Can you see how simple it is, boys and girls? Now the value of A, we're able to calculate it because we have the recharge amount. We just subtract the other amounts given from the 400, and then we are left with that 276. Now let's go along. Let's continue. It says determine the difference between the amounts used. So when we talk about the difference in mathematical literacy, we don't say how big or how small the other item is. It is the subtraction. We subtract the difference we give, we subtract the amounts. So it says determine the difference between the amounts used for other mobile calls and the amounts used for national fixed lines. So now let's have a look. Other mobile calls, how much did they use? 112.25. 112 rand 25. And then now, how much did they use there? Oh, okay. Boys and girls, can you see the mistake that I made? Here, I have selected the amount charged. And then according to the question says amounts used. So that means I made a mistake. I did not read the question thoroughly. This is what you need to avoid as well. You must look at the information that is required. Now, they are not talking about the amount charged. So it means this one, it falls off. What they are looking for, the amount used in minutes. So now, for other mobile networks, they used what? 127 minutes. And then for the national, because they said difference between the amounts used for other mobile network, this one, which is 127 minutes, and for the national fixed lines, this one. So meaning the national fixed lines is 12. And then we go back to our calculator. We say 127 minus 12. We get our answer to be 115. So meaning they have used 115 minutes. 115 minutes. That is the answer that they are looking for, because they said the amount used, not the amount charged. So they are both amounts, but the other one is amount used in minutes. This one is amount charged in rands. So we have to be careful when it comes to that. Now let's continue, boys and girls. It says, express the monthly payment. Monthly payment, where's our monthly payment? Here is our monthly payment as a percentage of the outstanding commitment value. How much is the outstanding commitment value? It's 799 rand 98. So how do we express it? They say express the monthly payment as a percentage of the outstanding value. So now the monthly payment, it is 266 rand 62 over the commitment value 799 rand 98. We multiply it by 100 because they said as a percentage, and then we say 266,62. We divide it by 799,98, and then we multiply the answer by 100. We get our percentage to be 33,283,333,2,1. This information I got it from where? From my calculator, and then now because it is, they said as a percentage, it will be 33,33%. And then this 100, because they said your answer must be as a percentage, and then we are expressing it as a percentage. That is why we are multiplying by 100. I hope you understood this one, boys and girls. You did not make a mistake. Once you see that 100 is for the percentage. Let's go to the next question now. Number 1, we started with the utility bill. Now we are into the salary slip. How do we read and how do we answer? How is a salary slip examinable? How does the examiner want it? How do they ask questions based on the salary slip? Mr. Rasmus receives his salary below. Table 2 below shows some information. So it says Mr. Rasmus received his salary advice below. This is his salary advice, and then table 2 below shows some information extracted from his salary advice. And then it says note. Again, they're giving you this notes. They say note, UIF is a 1% contribution made by the employee, meaning the 1% is paid by Mr. Rasmus. Now it says, write down the name of the organization where Mr. Rasmus is employed. Now looking at this, it has a pay point. Okay, pension number is there. It's indicated. And then it's a pay point, employee number, the surname and the initial of the employee, which is Rasmus GB, and then now the organization, it's Kuru Mines. Now question says, write down the name of the organization where Mr. Rasmus is employed. The answer is so simple. Kuru Mines. It's given, boys and girls. It's the name of the organization. You just select it there. You don't need to scratch your head. It's already there. Now you go to the next one now. What does the acronym UIF stand for? Remember I said the terminology is examinable. Now we say UIF. UIF stands U is Unemployment Insurance Fund. UIF stands for Unemployment Insurance Fund. Let's continue now. It says calculate the amount on Mr. Rasmus' salary, UIF amount. Calculate the UIF amount on Mr. Rasmus' salary. Now here, this is what they're looking for, as you can see. Now, what is the basic salary? We said 1%. We said UIF is 1% of the basic salary. And then how much is Mr. Rasmus' basic salary? His basic salary is 26,240. And then we said they're deducting how much, or they're contributing 1%. 1%. And then if you prefer, you can write it this way. 226,240, multiply it by 1/100. Now quickly, it's 26,240. We multiply it by 1/100, which is 0.01. The answer will be 262 rand 40 cents. So this is what Mr. Rasmus is contributing towards the UIF, 262 rand 40 cents. Now let's move to the next question now. Question number 3. Now with question number 3, it says now, define, okay, this one is a truth statement, account statement. Use the annexure alongside to answer the questions that follow. Define the term credit in the given context. Now, when you look at this, it's a truth account. Truth account, it means Truworths as a store, they are borrowing us money to buy the clothes, and then we repay them on a monthly basis. So they're giving us the buying power. The usual word that we use, you say, Ma'am, they said our buying power is this much. Now here, the question says, define the term credit in what? In the context, based on the statement given. And remember, we say credit available. What is the credit available? Sometimes we say credit available, sometimes we say the buying power. Now, with this one, because they're asking about the credit, we say now, credit is the amount of, or amount paid by Mr. Whose account is this one? It is Mr. Nwani. Mr. Nwani for the clothing account. So meaning every time they pay, they get a credit available. So meaning they pay the installment and then the credit increases. So it says credit is the amount paid by Mr. Nwani for the clothing account. Now let's continue. It says write down the payment due date. Now looking at the statement very close, Now they said to us, when is the payment date? Now we are given the account limit there, and then we have the areas. Do they have the areas? 00. Then they say you can buy for 00. Then there's the installment. The amount due is that amount, 1,271. The balance brought forward is that one. Now it says payment due date. Here at the middle now. At the middle is the transaction that took place. What did they do on these dates? These are the dates given. On the 28th, what did they do? They made some purchases, and then on the 7th of December, they also made the purchases. So now with the transaction, they will give you the date and the transaction, what happened in the account, and then on the credits, debits or credits, now it shows the amount that has been used, or the amount that has been paid into the account. Now right here at the bottom it says payment due for this account. It's when? It's the 4th of January 2023. Now a question says write down the payment due. So payment due is on the 4th of Jan 2023. Now the next one, use the balance brought forward. Remember we spoke about the closing balance. Now in a statement it is the balance brought forward. Now, which is the opening or the opening balance or the balance brought forward. Now it says use the balance brought forward and the transactions to show how the balance amount of 14,170.66 was determined. Now what is the balance brought forward now? The balance brought forward is 10,825 rand 30 cents. Now we want to come to where? To the closing balance, this one. This is where we want to come to. We want to know how did the 14,170 come to. Now we say, okay, fine. From the balance brought forward, Mr. Ngwane paid 1,100. So we are going to subtract 1,100. 1,100. We subtract it. Remember all these amounts, they are in rands. We subtract 1,100. And then after subtracting the 1,100, we are adding now. Remember now, this one is a transaction. Why are we subtracting only 1,100? They paid the 1,100 towards the installment or towards the account. It's a payment made. It's a credit available. As you can see, it's a credit that Mr. Ngwane made. We said it is the amount that Mr. Ngwane paid towards the clothing account. So it's 1,100. Now we continue. We come with these ones now. They have used 91 rand, 91 rand 57, and then we'll also add 899 for the engagement. Mpangeni, okay, they've used 899 at Mpangeni. They also used this card again to buy a gift card of 1,000 rand. They made also a purchase of 1,930. They also made a purchase of 205. Another purchase of 199. And then the last one being the one of 212 rand 36. So boys and girls, as you can see, these are the transactions. There are no payments here. This is what Mr. Ngwane used. Now the closing balance is now at what? At 14,000, as you can see, up until 212. Now we want to know how did they come, or how did Mr. Ngwane's account come to the amount of 14,170. So we said it will be 10,000, the opening balance or the balance brought forward, 10,825 and 30, and then we subtract 1,100, the amount that he paid towards the account, and then we start adding now what he has used again in that account. He has used 91 rand 57 at Mpangeni, another transaction of 899, another gift card transaction. He bought a gift card for 1,000 rand, and then he spent again 1,930 plus the 205. We are adding all the amounts now because it's what the amounts that are being debited that he has used in his account. Plus 199, we also add 212 rand 36, and then it has a total of now what 14,000. It will be 14,170 rand 66, because now we have the 899, and then we have the 1,000 rand, we have this one of 1,930, we have the 205, we have 212 rand 36. So all in all, that amount, it add up to what? To 14,000 170 rand 66. So basically you took the opening balance, and then you subtract the payment, and then you add all the amounts, the transactions, the debits that has taken place into the account. Those amounts, you add them to the opening balance, you subtract. So there are two ways. You just take the opening balance, and then from the opening balance you add all the transactions that took place, the amount that he has used, and then you add it to the 10,825, and then he made a payment of 1,100, and then you are left with what? With 14,170 rand 66. Now the next one, boys and girls, I have tried as much as possible to show you different types of invoices, financial documents. On this one now, we are having this one that says explain. This one is a quotation from Tiger Security. Maranatha Computer College wants to upgrade its CCTV closed-circuit television in its premises. Given below is one of the quotations for the installation from Tiger Security. Now they show us quotation from the Tiger Security, the items that they will be installing, the quantities. Here's the items that they'll be installing, the descriptions of the items, and then the quantity that they'll be using, the unit price per quantity, per item, and then the tax amount that is charged, and then the net price, and then the date of the upgrading, when is it, and then in total here it says 50% deposit. These are the notes given, so that when Maranatha Computer College sits as the management board, then they see, oh, okay, this is what Tiger Security is quoting us, and then what is it that they want? They want a 50% deposit in confirmation of the quote before they can come and install, and then they want you to pay the 50% deposit upfront. And then they say again, now what is the total cost, the subtotal of these items? Here's the amount, and then are there any discounts? No. As you can see, it says 00. The amount excluding VAT is this amount, and then how much VAT has been charged? 15%. It amounted to 9,000. So the total cost is that one of 75,931 rand 15 cents. Now it says explain what is meant by quotation in given context. Now in this one we say it is quotation, it is a formal statement. It is a formal statement or document. A formal statement or document that Tiger Security, let me just say TS in short, that will be Tiger Security, issued to whom? To Maranatha. To Maranatha College, Computer College. To Maranatha Computer College to upgrade to upgrade what? The CCTV. To upgrade the CCTV at a statement price. At a statement price, or at a stated price. So meaning they show the statement. On the statement, they indicate what are they charging, how much are they charging, and then what they will be doing. Now, boys and girls, we are almost out of time, but let me just quickly complete this slide and then we'll continue in the next session. But for now, let me just wrap up nicely so that you get to understand how to answer these questions when it comes to the quotations of invoice. How are these financial documents examinable? And then it says calculate the unit price of HIK analog 180p bullet. Now you go back to your description. You look at this. Oh, okay, here is the HIK analog 1080p bullet. And then quantity, how much they bought, 16. What is the unit price? It is what we want to know because it says calculate the unit price. How much did they pay for? 11,040 rand. So now the total paid, amount paid, it is 11,040 rand. For how many items? For 16 items. So we know for the total of 16 HIK analog, they paid 11,040 rand. So now for one HIK analog, it will be how much? It will be 11,040 rand. We divide it by what? By 16. And then it gives us what? 690. This is what the security, Tiger Security, is charging for one HIK analog bullet. So boys and girls, as you can see, now it says write this one. The next question, write down to the nearest 10 cents. And boys and girls, rounding up is so important. Now you get penalized for not rounding up in a correct way. The total cost of the quotation. Now they say round up the total cost of the quotation to the nearest 10 cents, to the nearest 10 cents. And now the total cost of the quotation is what? It's 75,931 rand 15. Now because in South Africa, this is the total cost. In South Africa, we no longer use cents when we make our payments. So if it's 15 cents, they round it down. So the shops, they either lose or gain. So when you pay, you either also lose as a customer or you also gain. Now, because we are no longer using the cents now, it says round up, round down. Here, what is the keyword? It says round down. They did not say round up, but they said round down to the nearest cent. So where are we focusing at? Here's our cents now, the 15 cents, because we said it's 75,931. And then when they say round it down to the nearest cent, and then we focus on the last two digits after the comma, it will be now 75,931 10 cents. This is the amount that you'll be paying. Boys and girls, I had much fun doing this financial documents with you. Unfortunately, it is the end of the session. I hope you enjoyed yourself as much as I've enjoyed myself, and I hope you understood all the concepts and the terminologies that are there in terms of financial documents. Even when you go now to the next topics, whereby you'll also come across the financial documents, you have to interpret them, and then you will be able to do so because we have already done what the glossary of terms, the terms that you are going to come across, and you know how to use them, and you know how the examiner asks questions based on the financial documents. Unfortunately, we are unable to finish our slides, but I hope your teachers will share the whole presentation with you so that on your own now you can go through all the slides and you'll see it's just different types of slides of financial documents, but they also stay the same. They ask the same information. Once you are able to interpret the first one like we have done, and then it will be simple to answer the rest. Thank you for watching this lesson. See you next time. I hope you'll do your work and you are going to give us 100%, as we have to take Gauteng back to position 1, reclaim our crown. Thank you for watching. Goodbye.